Good morning, everybody. During this interview, I have three main objectives which we are trying to achieve here. Wole is the CEO of NetPlus. We want to find out from him why he sought the help of a private equity firm. With the benefit of hindsight, what has worked and what are surprises that he has encountered as he has worked with the private equity firm. And the last one is if he had to do it again, will he do that? So having said that, Wole, when we think of a technology entrepreneur like yours, we think of very smart people who take their hobby from the college room and they run with it and they turn it into multi-billion-dollar company. So is that your story as well?
Not really. Good morning, everyone. Yeah, I mean, the typical tech entrepreneur has come to have a face, when we think about them around the world. We know the popular guys and what they've done with their businesses. In this part of the world is a little bit different. We're expected to go through school. We can start stuff in the dorm, but we're not expected to leave the dorm to pursue until you're actually done with education. So my story is that I started out born, raised in Nigeria, went to school. I've always done computer science, so I read computer science in Obafemi Awolowo University in Ife, where I graduated in the very early 2000s, and then moved to Lagos to start my career. Started my career in technology, worked with Citigroup for a couple of years before, moving on, still in tech, to the oil and gas business, where I did some pretty good work for ExxonMobil, all in Nigeria. Then I decided, after some time, to move to the US to continue my education. So I got an MBA from the Wharton School in the US, and then decided to start a career again in the US. I worked in the tech scene in New York for about 6-7 years. That took me around, gave me a lot of experience. Moved to a lot in Europe, working on different projects. But while doing all that, if you live in the West and you grew up in Africa, there's never a day where you move around and you don't see opportunities. Opportunities were just staring at me everywhere I looked from a technology standpoint. And I knew that I was going to have to do something, about it, because there were things that could impact the way we do business, things that could impact, profitability of companies if they adopt some of those things. And that's how we started NetPlus. At the time I was thinking about these opportunities, things were also happening in the Nigerian market at the time. The CBN was leading what we famously call the cashless economy in Nigeria, for those people who are familiar with the Nigerian economy. And that started a lot of things in the electronic space in Nigeria. The banks were were looking at electronic transactions and how to drive that. The regulators were pushing them towards adopting different electronic channels. And I thought the last piece of the puzzle was the merchants, the merchants and the consumers. How are they going to adopt this electronic system that the players are creating? And that's how we started. We saw an opportunity there. We saw a need to provide services, especially for the merchants, and that's how NetPlus was born. And that's really what we've been focused on since we started.
Thanks for sharing that with us. So as we move forward, right, as you are looking to do something different, and you are looking either for a source of capital or for something prior to you allowing Synergy Capital to make an investment in your firm. So walk us through that. What was the problem that you are trying to solve? Did you know that you needed a private equity partner, or how should we think of that?
So it's been a long journey. I'll find a way to present it in a very in a short way. So when we started out, we were looking at the electronic payment space, or let me say the electronic business space, and that would include, if you look at it very broadly, e-commerce, e-payments, which would include in-store payments, web payments. How to drive e-commerce. So we're looking at, that broad value chain. And because it was a new market, it wasn't easy to bet on one area versus the other one, because the market was new, it was evolving. We didn't know how the market was going to shape what we're doing. So we started out solving the e-commerce problem, where we were providing infrastructure for merchants to be able to transform their brick and mortar stores into online stores without the need to engage any technical resources to be able to do it. So one click and you have a store online that has everything that you need to actually succeed. But as time went on, we've been able to progress that to harden payments infrastructure for the merchants, either in-store through our mobile point of sale system, which is also coupled with interesting vertical applications that enable the merchants to do much more than payments, but using those applications to run their business. You have inventory system, which a merchant will always need to track their product. You have a restaurant management system, which a merchant that's running a restaurant can use that to serve customers and engage customers. And you have solutions for payment or delivery. So the business has really evolved from where it started, to where we are today. In terms of when did we realize that we needed funding, and what led to a private equity discussion. So I thought it was a natural. It happened in a natural way. We were growing. We were doing a lot of. We were solving problems. We had a lot of customers engaging us, especially the big banks. We're working with 60, maybe now about 80% of the banks in Nigeria are our customers. When you have those opportunities and you are growing that way, you need to expand your resource pool. And I thought at the time we needed funding. We started out with friends and family. We raised quite some money with people who knew us, people who wanted to support what we were trying to do, who believed in what we were trying to do. But there's so much that can take you. So we then started looking at institutional investors. We looked at a few. For us, it was not just about the capital. We needed capital, that's for sure. We also needed partners or investors that could understand our space, what we're trying to do, and can make a difference from that standpoint. So we were looking for strategic investors, so to speak. People that could introduce us to the regulators, for example. In our space, you need licenses. We're licensed by the CBN. We have 2 different licenses to operate what we're doing. In other instances, you could be applying for those licenses for years and years without getting them. But being in the right network, knowing the right people was very important to the growth of our business, and those play important factors in engaging and finally selecting Synergy Capital as our investor.
That's really great. So just to summarize for everybody, they brought capital to the table, they opened doors for them, which could have led to sales growth. So you have been in this relationship now for what duration of time?
For 2 years.
For 2 years. What has worked well and what has surprised you? Just summarize it for us.
Yeah, the business continues to grow. We've been growing revenue at about 150% year on year for the last 3 years. EBITDA margins about grown double that. Mm-hmm. And that's that you can attribute that to very focused management, but also a very very helpful partnership with the investors who are able to see what we're trying to do, our growth trajectory, and sometimes criticize how we're trying to do it in a very constructive way. But sometimes, a lot of the time, provide the required help that we need to be able to execute those. So apart from the sheer numbers, which in revenue and EBITDA and profit, has been, quite good over the last few years. We've been able to also build some really solid partnership that is helping our business, and I think, could be the cornerstone of our success going forward. I'll give you a couple of examples. We recently signed a partnership with one of the leading telcos in Nigeria to roll out our mobile POS system. The way POS works in Nigeria, point of sale, I don't know, and I think it's similar in other West African countries. Financial institutions, especially the banks, are the ones that really invest in those terminals because they're expensive. What we've been able to do is to crash the price significantly, such that even the very small merchants who are often neglected, there are about 16 million of those in Nigeria, by the way, can actually have these terminals as a tool of the trade. We're set to roll out about 150 of those, 1,000 of those terminals in the next 18 months through the partnership with one of those telcos. We've also recently gotten into a program with one of the card issuers around the world. I think I can mention the name, MasterCard. They're about to make that announcement in the next few days, actually. We're one of the 5 fintech companies around the globe that have been selected for this year's engagement and partnership with MasterCard. What they do, like most smart big tech organizations, is to work with small organizations, especially for MasterCard in the fintech space. These are guys that are disrupting disrupting digital payment ecosystem, and we've been lucky to be selected to be part of that. One of the very first products we're releasing in conjunction with MasterCard should be out at the end of April, is to solve the pay on delivery problem that we have, not just in Africa, but all around the globe, Middle East, Latin America, and these are places where we hope to run the footprint of this product all around. I think it's about time that Africa should also be able to export technology solutions around the world. It's always been the other way, and we're very proud of the work that we've done and the possibility of taking this product all around the world, especially areas where we have this pay on delivery problems, where it's just a nightmare with 80-90% of transactions still happening with cash today. Yeah.
Got it. What has surprised you, though? Because I can imagine that there will always be 2 sides of a coin.
Surprises, yeah, okay. I mean, what I say to entrepreneurs is, if you're looking for funding, do your research. Be very deliberate about who you are working with and what value they bring to the table. Growth is good, but it comes with a lot of nuances and challenges that sometimes entrepreneurs are not prepared to handle, because it comes really fast, really, and they're wondering what's really going on. And I think that's a little bit of the challenge that we had to deal with here. We were growing, we had very focused partners who understand our space as well, and who could challenge our strategy. Sometimes you have a very good strategy, it might not be the best strategy depending on the market that you are in. So that was one area that personally I needed to get used to be able to say, this is what we want to do. Does it really make sense? Looking at it from all every possible perspective. Which when you look at it at the face level is really great, but to the entrepreneur who is used to, is my strategy, is my execution, it can be challenging. But apart from that, I think we've had a pretty good relationship, and and we're growing, as demonstrated by all the results that I've mentioned earlier.
Yeah, thanks for that. Just one final question, and if we can change roles here. So what I do is to find the right GP to make a commitment to, and hope that they deliver superior returns for us.
Yeah.
Given what you have gone through, if there is one question that we should ask a GP when we meet with them, what should that question be, given that you have been on the other side and you have gone through the whole thing? If there's one question that when we sit down with a GP that we really want to pose to find out whether it's value creation or whatever it is, what should we be thinking of?
It's an unfair question because, yeah, I think it depends a lot on the scenario.
Okay.
And, you know, I'm sure you have your, you know, criteria and what you're looking at. But I think from an entrepreneur's perspective, and given what I know about dealing with investors, I think it's important for investors to understand two core areas. I think there's a need for them to understand the geographic area in which they're playing. Okay. Running a business in Lagos is very different from running a business in New York, light and day. Got it. So an investor who is very versed in one market might have no clue about the other market. So yeah. I think it's very important for you to ask about that, the knowledge of the geographic area where the investor is operating. And I think the other one is the sector experience, the vertical experience. Maybe more so in some verticals than others. I think tech is just one of those areas that an investor who does not understand the space will struggle. And they will struggle with the entrepreneur, they will struggle with the team, and it may not be productive. Tech, there's a lot of instinct with the way tech entrepreneurs, you know, run their business. I mean, sometimes it's also data-driven, but there's a lot of instinct. And people who do not understand that and who do not understand the market may struggle to work well with such entrepreneurs. So I think asking, you know, GPs about those two areas could tell you a lot, give you a lot more insight into what you're trying to do, and that, you know, that could provide the answers that you're looking for. Fantastic.
Local knowledge, sector knowledge, those two things are key. Thank you so much for your candor with us today, and we are all rooting for you to succeed. Thanks very much.
Thanks a lot. Yeah.